Hey all, welcome to ShareTreck, and this is Sunday. This is the second video for Sunday. I thought I'll put out another video because I wasn't satisfied with the first one that I did. I'm feeling much better now. My health is back to normal, and I thought let's put that little extra effort and get some more information out to you for next week, because next week is going to be very, very interesting. A whole lot of reports are coming out, not only earnings report, but also economics report. So let's get started. I hope all of you are having a great weekend. I sure am right now. And here is what we are looking at next week. It's going to be a momentous week and deserves a video today as well as Monday morning. So Monday morning we'll cover more about news items, but today I want to talk to you about all the earnings related stuff as well as economic information that's going to come out next week. Let us first start with the charts to set stage for the conflict that the market will resolve next week. So I'm going to take you to the TradingView platform, and I'm going to walk you through some of the critical points at which the charts are resting at the end of last week, and how the news coming up next week, which we are going to talk about later in this video, is likely to impact it, whether it will push the market up or will it push down. That's what we are going to discuss. So hang on while I get onto the TradingView platform. So here we are in our charts, and I'm going to look at US oil first. And as you can see, US oil was perfectly poised on top of this horizontal line of support at 95.08. I think the next question for us is it going to go up, or will the support give up and it'll start coming down? So this all depends on how the economy is performing, whether the economic reports coming next week are going to show that the economy is becoming weaker and going towards the recession case, in which case we'll have oil coming down further. However, if the economic reports show that the economy is still strong, we can expect oil to bounce back from here and go and test the resistance before coming down again. So that's what is likely to happen. If you look at QQQ, you can see that QQQ has reached as high as it has done in the past, and it pushed down from this resistance at 306.53. And the question now is, will all these exponential moving average continue to give support, or are we going to break through above this line of resistance next week? And the answer again lies with the earnings reports that are coming to us from Monday onwards. And we got three different sets of earning reports. One set of earning report is for the tech sector, and the other set of reports are coming for the consumer sector with companies like P&G and Colgate reporting. And then yet the third set is going to be pharmaceutical companies like Pfizer, Bristol Myers Squibb, and those kind of companies reporting. So there is a wide range of views that we are going to get into the market and how these companies are looking at the upcoming quarter. So all those are catalysts which are going to decide whether NASDAQ is going to go above this line of resistance of 306, or if it's going to go down and test the support at 292. So it's going to be a wild ride out there. If you look at S&P 500 also, you can see that it's supported by the 50-day exponential moving average, and it has still got some gaps that it needs to fill. So I'm just going to draw a line out here to just check where the gap is at, whether it has been filled or not. You can see there's still a little bit of gap left to be filled. And if the reports that are coming up next week are all conducive, then we are just going to break through this resistance out here, fill the gap, and then move upwards beyond 401.9 and gets checked by the 100-day exponential moving average at 407.67. And then if you look at the Russells has bounced back from this diagonal line of support, but is this diagonal line of support going to hold on? Now, again, it all depends on what we are going to get in the next week in those three sets of earnings that we talked about, three categories of earnings, and also the economic reports that is coming up. We are going to talk about all those things. I'm going to go week by week with you and have a look at various companies and how they're going to impact. And if you look at the VIX, it has come down and it has formed a perfect doji candle out here and looking at 22.73. Are we going to break down below this and going to go towards more of a normal market scenario? Again, the question depends on all those reports that we are getting. If you look at the US dollar index, it's formed a perfect doji candle and it's trying to move above this diagonal line of resistance and the 9-day exponential moving average. If the US economy shows weakness, then there'll be some weakness in the dollar going forward. But if the US economy shows strength, that means the Fed is going to increase interest rates anyway. So the US dollar index is likely to spurt further up. We're going to see all of these in the slew of reports coming up next week, and we're going to pinpoint the day of the week when those catalysts occur. So on Monday, we have Infosys reporting. It's a IT company, and it'll show the strength of the outsourcing market. And its clients are all big companies, and it'll give us a view of whether big companies are cutting their expenses. So I won't hold too much on Infosys at this point of time, but on Tuesday, we start having real strong catalysts coming in. On Tuesday, we have UPS, Alphabet, Microsoft, and Visa reporting. UPS should show good results as they had already declared stronger guidance for the year when they did the Q1. And earnings missed by any one of them could tilt the balance to the bears. When it comes to Alphabet will have to survive the ad spending slump showcased by Snap and Twitter in their Q2 earnings. So that's going to be a cliffhanger for us. Also on Tuesday, we will get the home price index. We should hope to see this drop. I mean, the home price index should drop. If it doesn't drop, that means that all the mortgage tightening that has resulted from mortgage-backed securities sale by the Fed has not had much of an impact. That's a very unlikely scenario. This would also be followed by the new home sales report at 10 a.m. and there is expected to be some weakness in that in those numbers. The previous reading was 696K and we expect a drop of 32K. Anything worse than that is not priced in and can be negative for the markets. We will also get a consumer confidence index at 10 a.m. and expect it to drop from 98.7 by almost 0.9% to end up at 97.8. Anything more than that will cause the recession odds to increase. This means a very dovish Fed and positive for the stock market prices. On Wednesday, we have Shopify, Meta, Boeing, and Bristol Myers Squibb reporting. And another miss will with Shopify or Meta can be a catalyst for the market. And it will be a negative catalyst for the market. And also on Wednesday, we have pending home sales numbers coming out at 10 a.m., followed by crude oil inventories readout at 10:30 a.m. and the FOMC statement at 2 p.m. The big question is, will it be a 50 basis point hike or will it be a 75 basis point hike? I think 75 basis point hike is already factored into the market, but if it ended up being a 50 basis point hike because of the other factors, then we can expect the market to jump. However, the good news is that we have Apple reporting on Thursday. So regardless of whatever happens in an earlier part of the week, on Thursday, a good report from Apple can lift up the spirits of the market. And we also have Amazon, Intel, Pfizer, and Merck reporting the same day. Also on Thursday, we'll get the first reading of the GDP. Last quarter was negative at minus 1.6. While for this quarter, the market expectation is a reading of 0.3% positive. Anything less will lead to fears of recession, and a negative number will mean that we are already in a recession. This will also be a major catalyst as it would predict Fed behavior going forward. We'll also get a reading of the initial jobless claims that is expected to drop from a reading of 251K to 248K. And then if we move on to Friday will bring earnings from AbbVie, AstraZeneca, and P&G before the markets open. We'll also have options expiry. The results from the big pharma should show us the health of the pharma companies, and that in turn indicates a potential merger and acquisition activity as well as collaboration deals in the next 2 quarters. Also on Friday, we'll get a core PCE index that is expected to come in at 0.6% as compared to 0.3% for a period earlier. Also, we get the University of Michigan Consumer Sentiment Index for July that is expected to be flat at 51.1 as it was in the previous period. So friends, strap onto your seatbelts and prepare for a bumpy ride ahead. And if you were to ask me a question, what's going to happen next week? The answer is going to be a lot of volatility. And we'll see whether Apple can save the day if things go sour earlier. Well, my friends, that brings me to an end of the video today. And as always, if you like this video, please press a like out there. And if you have not yet subscribed, please subscribe and help us expand this community and grow this channel. Thanks and have a great day. Bye for now. What you could do next. Either you could select one of the 2 videos below, or maybe you could just press the subscribe button and help us grow this channel.